Happy Monday, everybody. I hope you had a great weekend. Last week was a pretty eventful week in keeping with so many weeks these days. Let's recap last week's action, preview what we're expecting this week. It will be full of some new eco data, and this will be important. It will also be important to see if the animal spirits that led most of last week but fell apart on Friday are back. As we move into March, you know I like to add the statistics. February was the fourth straight month of gains. Following prior 4-month streaks, S&P gains an average of 6.4% over the next 6 months and 12% over the next 12 months. Positive returns 84% of the time. Now add in the fact that we have an election year, post-pandemic, rate cuts or not rate cuts. A lot to add in here. Let's see how we do. Markets gapped lower at the open last Monday as a slow news weekend led to higher treasury yields and inflation expectations ticking a little bit higher. No major eco data to speak of, and Bostic and Harker, the Fed heads of the day, they stick to the higher for longer narrative, no rush to cut rates. There was some action in the final hour as oil closed down and markets tried to go higher. There was some optimism of a ceasefire between Israel and Hamas. That was short-lived. In the last 30 minutes, all indices turned negative. The Dow closed down 1/4%, S&P down 1/10%, and the NASDAQ down almost 1/2%. Overall, many would say that you can now separate stocks between different indices and different sectors. Tech was down. Tesla, Apple, Amazon, Microsoft, and Meta, but semis were up about 1%. Nvidia, AMD, Qualcomm, Broadcom, Intel. Money's starting to seek out stocks that have not run so far so quickly, usually a good sign as we see broadening. We're still seeing Wall Street chase the markets with rising year-end targets. Latest Bank of America, S&P up to 5,400 by year-end. That is 5% higher than Monday's level. Job numbers and a few key earnings on the minds of markets. Markets opened lower again on Tuesday, led lower by Apple and Tesla with news from China weighing in on stocks. AMD also hit by China news, this time from the U.S. prohibiting the sale of their AI chip in China, national security concerns. China announced stimulus, but not enough to calm the markets. Eco data was solid, but mostly ignored. We have jobs to watch, and even Powell and, the State of the Union. All coming. Super Tuesday was in the air, but not much market moving there. Anything tech got slammed, and there were some gains in financials, consumer staples, and energy. By the end of the day, the Dow and the S&P were both down by 1%. The NASDAQ was down by over 1.5%. Some things woke up the markets on Wednesday as markets opened higher after there was more talk from China. This time, markets think that stimulus and the 5% target is good news. Better than feared, you know how I love that term. Retail sales in Eurozone in January and inline labor market data, ADP and JOLTS. Then all the eyes and the TV coverage went to Powell on Capitol Hill. The released written testimony was full of absolutely no major surprises to the markets. He just repeated the talking points. Q&A did not do too much on Wednesday to clear things up either. And as I reported on Friday, CNBC reported that Powell said that the Fed is not ready to start cutting rates, and the Wall Street Journal reported that the Fed is on track to cut rates. So rate cut expectations for June are still close to 90%. By the end of the day, the Dow was up about 1/4%, S&P up 1/2%, and the NASDAQ up a bit over 1/2%. Markets opened higher again on Thursday as eyes were back on Powell, although there was much of the same. Market moving news did come fast and furious. ECB decided to hold rates as is, but rate cuts may be coming in June. Jobless claims came pretty much in line, and the unit labor costs came down more than expected. Big jobs numbers were due out on Friday, so there was a lot of positioning. I still think the news stations are making more of this. We had Powell on the hot seat, and the Fed heads are mostly singing the same song. It will take a lot to move the needle of rate cuts coming this year at least. I'm not sure, but that is just my opinion, and that is not the base case held by most. When the markets are pricing in 3 cuts, yes, you know what that means. Stocks with a tailwind, yes, price in the same news again and again and again. State of the Union was a big Biden campaign ad, as many saw it. Not much market moving news there. By the end of the day, with positioning and the tailwind, the Dow was up just about 1/3%, S&P up 1%, and the NASDAQ was up 1.5%. Markets woke up Friday to the jobs number, and that was much higher than expected. So people started thinking, no cut coming. But then they forgot to keep reading and see that the numbers for January and December were revised downward by more than the beat for February. So yes, for those doing the math, that means that the 3 months as a whole were not significantly higher. Facts. Don't let them get in the way of a good story. But you did see the unemployment rate tick up to 3.9%, and wages grew slower than expected. A mixed bag for sure. Market looked to open higher or flat, nothing much. After what looked like a strong day, midday had some of the Mag 7 roll over. This was notable as we have not seen this kind of reversal in a while, and there was a lot of micro stock-specific news that moved different stocks throughout the day, looking like an old record was about to be broken. The S&P was looking like it would be up for the week. That makes 17 of the last 19 weeks, not done since 1964. was not to happen. By the end of the day, for Friday, the Dow was down 0.25%, S&P down 0.75%, and the NASDAQ was down 1.25%. For the week, the Dow was down about 1%, S&P down 0.25%, the NASDAQ was down about 1.25%. Let's preview this coming week. As I mentioned, it's going to be a big one. CPI Tuesday, PPI on Thursday, along with retail sales. Now, this one's going to be a big one. That's a big one to watch these days. Remember, consumers are about 70% of the economy. We'll get normal jobless numbers on Thursday. Also, the University of Michigan consumer sentiment and inflation expectations will be on Friday. What? No Fed heads? No Fed heads. Blackout period, next meeting March 19th. And what is expected then? Absolutely nothing. That is sort of the opinion right now, is that we will not see any rate cuts coming this early in the year. Okay, that is the week behind and the week ahead. Come back on Friday. I do have some thoughts that will be based on my Formula One interests. So I think it'll fit right into the planning that we're doing overall. Please stay in touch. Have a great week.